Hey everyone, thanks for jumping back into the cryptoverse. Today we're going to be talking about Bitcoin. So we've made it to above the 20-week moving average, or have we? So we're going to be talking about that in this video. If you guys like the content and you've been following along, I would appreciate it if you subscribe to the channel, click the bell icon to turn your notifications on, and also join the Telegram channel in the description below if you want to discuss these charts. So we're going to be doing an update on where we are. And I've been posting a lot of videos the last few days talking about the 20-week moving average, as I have for much of my YouTube career. The idea that the 20-week moving average is one of the prerequisites that we have to have before we can even suppose that we might be starting another bull run. And last night, I did a live stream where I was talking to people about the 20-week moving average, and I also sent out a tweet on Twitter, basically saying that, I don't look at short-term price movements that often, and I really don't think that it's even worth looking at because short-term price movements are often very irrational and can be heavily manipulated. But it just seemed to me that looking at market sentiment, I carry out a lot of polls, and the polls that I had been carrying out were, the bearish I had seen. And even a lot of other major crypto YouTubers were basically saying that we're headed back down. And seeing this kind of reminded me of past market cycles when, this is one of those points that you have to reach before you can start another bull run. If every time we start to move up at all, people are constantly saying, we're heading back down, or that we're going back up, I should say, then you have to become skeptical, just like we saw during the run of 2019. But in this run, Bitcoin had basically gone up 2x in a matter of weeks, and people were as bearish as I have seen them, saying that Bitcoin's going back down to $1,800, that it's going to $1,000, and I've been pretty adamant that this is likely not the case, that it seems like this would completely break market structure. That's not to say that it can't happen, but just the probability of something like that happening is fairly low. So this is all noise. Every market cycle, you will see the same thing. You will see people say the same thing. When we were over here, when the price of Bitcoin bottomed out at $200, people were saying we were going down to $100 and $50 and less. They were saying we're going to zero. And again here, they're going to say the same thing. They're going to say we're going down to $1,000. I've seen 1,800 thrown out a lot. This is all things that you will see every market cycle, and it'll happen basically forever. It's just how the market works. So by combining data science and market sentiment, I try to get a feel for where things are going, but we do focus on the macro level picture on this channel because, again, looking at short-term irrational price moves are usually just not worth the time. So we're above the 20-week moving average. So what does that mean? Well, first of all, we need to actually start printing candles above it. Before we jump into TradingView, I just want to remind you of this chart. It's the primary logarithmic regression band fit to non-bubble data. You can see that I haven't even fit it to this data right here. It was just fit to these red data points that you see previously. And it basically predicted the bottom of this drop. And I had even said that the 300-week moving average was my ultimate bearish scenario. And it does seem like that we went down that low, but only for a few minutes. But really, it was the 200-week that has acted as our baseline support, which is where the candles found their support, which historically has been the case. So we've said that this, while it doesn't always happen like this, that the 20-week moving average is essentially the same thing as this primary band at the current time. And that if we can start breaking above the 20-week, then we're going to go into the top half of this band. And if we get rejected by it, we're going to stay in the lower half of the band. And for the time being, we have gone above the 20-week moving average. Now, we're going to jump into this 20-week moving average again, just because I think it's worthwhile to do so. Before I jump into the TradingView chart, I just want to remind people that if you want to support the premium content that I provide in the form of weekly newsletters, occasional private videos for patrons only, access to a Google Sheets document with updated risk metrics at various price points to allow you to dynamically dollar cost average in and out of the market following my strategy, then please check out the Patreon channel, which you can find in the description below. It's just patreon.com/into the cryptoverse. So check that out if you are interested in supporting the channel. And if you'd rather pay with cryptocurrency, we have that option in the description as well. But go ahead and join the channel. I think it's really helpful for people in terms of risk management and looking at the macro level view of things. So if you're not into the day trading aspect of constantly moving your positions around, this is not that. It's looking at swing trades over a longer period of time, backed up by data science and machine learning to identify times to enter and exit the market based on risk management. So if you guys like that, if you guys like the idea of that, then check out the Patreon channel. You can see we have 3 tiers. The first tier being just the weekly newsletters that include risk analytics, among other valuation type insights. The middle tier includes a private Telegram channel and access to the Google Sheets document that I was talking about. And then the highest tier is certainly not for everyone. It's mainly just for people who want that one-on-one correspondence with me to talk through their own portfolio and various questions that they might have. So this is basically for people who want that. But again, if you guys want to support the channel, I don't actually have any affiliate links or anything like that. So if you're looking to support it, then this is the way you could do so. So let's get back to the charts. So one of the things that I think it's worthwhile to talk about is the 20-week moving average in terms historically speaking. This is where we need to be. We need to be above the 20-week to be holding it as support to confirm the start of the bull market. And it's going to take a few months. It's not going to be something that we can just say, okay, the bull market has started. You can see back in 2015, we broke through it. And once we broke through it, it was significantly later that we started holding it as support, about 3 or 4 months, 4 or 5 months or so. So this could take a while. And it's not even clear if we're going to hold it as support. We might not. We might drop back below it. But I think this is the thing that people were missing, that they had this bearish scenario that we have to go back down. But in reality, Bitcoin does not care about what your emotions tell you. In fact, normally it does. It behaves in the opposite manner. So we're above the 20-week right now. So the question is it what it seems? Well, we need to start printing full body candles above the 20-week, just like we did here, just like we did here. In 2015, you can see that we were printing candles above the 20-week moving average for years and years. Going above the 20-week moving average on a short time frame is not in and of itself adequate to even suggest that the bull market has started. But it is necessary. It's a prerequisite before it can happen. So it doesn't mean that it is going to happen, but it's one of those things that we have to check off our checkbox to say, okay, we're above the 20-week moving average. Now that we're above it, we need to hold the line. And when we get to that, we're going to say, okay, let's hold the line. If we hold the line, then we can start to become a little bit more bullish on shorter time frames and hope to see us continue to see a slow tick upwards on the price chart. So these are the primary moving average that I look at. Of course, there's many others, but I'd like to keep it super simple on here because I think at the end of the day, people overcomplicate things with Bitcoin and what the price is doing. But more or less, it behaves fairly well just by looking at the 20-week. When we break the 20-week, we tend to move up relatively quickly. The 200-week is our support line during the bear market. So bear market support. The blue line, the 20-week, is bull market support. And then the yellow line, the 100-week moving average, is our transition point. So, it's basically where we pivot off of when we're moving back and forth between these other two moving averages that are key in identifying the state of the market. So we're going to be following this, obviously, for the next several weeks, months, years, to identify whether we're going to hold this, and to try to maximize the profits that we're seeing. We're going to dynamically dollar cost average our way out of the market. But again, this is not financial advice. This is my strategy that I use based on data science alone. And so we'll continue to follow this. If you want to support the channel, again, check out Patreon. At least subscribe to the channel so you can be updated with future videos. And I will see you guys next time. Bye.